Welcome to How to Start Investing with No Experience as a Beginner. If you're listening to this, there's a good chance you've felt a mix of curiosity and caution when it comes to investing. Maybe you've heard people talk about building wealth, retiring early, or making their money work for them. Maybe you've even tried searching online, only to be overwhelmed by jargon like index funds, ETFs, compound interest, or market volatility. This audiobook is here to change that. For the next 20 minutes, I'll guide you clearly, calmly, and confidently through everything you need to understand in order to begin your investing journey. No hype, no pressure, no assumptions about prior knowledge. Just practical guidance, simplified concepts, and the reassurance that yes, you can do this. Investing is not reserved for the wealthy. It's not limited to financial experts. It's not something you need to wait to figure out someday. Investing is for everyone, including you. And this is your first step. So sit back, relax, and let's begin.
Chapter 1. Why invest at all? Investing is like planting a tiny seed today so it can grow into a strong, healthy tree in the future. At first, you don't see much change, but with time, patience, and consistent care, that small seed becomes something big and valuable. That's exactly how investing works. Your money might start small, but when you invest regularly and give it time, it can grow into a powerful tool that supports your future goals. One of the biggest reasons to invest is inflation. Prices slowly rise over time: food, gas, rent, and almost everything else. If your money just sits in a checking account or at home, it loses value as things become more expensive. Investing helps your money grow faster than inflation, so it keeps its buying power. Another important reason is your future self. Whether you dream of retiring comfortably, owning a home, traveling the world, or starting a business, the money you invest today becomes the support system for those dreams. Even small amounts make a big difference over time. And here's the good news: you don't need a lot of money to begin. Many investing apps let you start with just a few dollars. What matters most is not the amount you start with, but your consistency. Investing a little bit regularly adds up over the years. Finally, time is the biggest advantage you have. The earlier you start, the more your money can grow. Even small investments made today can become large sums in the future because of compound growth. By the end of this audiobook, you'll understand how to start investing, what types of investments make sense for beginners, and what mistakes to avoid so you can build a strong financial future with confidence.
Chapter 2. Understanding the Basics. Before you invest, you need to understand what investing actually is. Investing versus saving. Saving is storing money safely. Investing is putting money to work so it grows. You need both, but only investing has the power to build wealth. Risk versus reward. Every investment has a level of risk. Low risk usually means lower potential returns. High risk may mean higher possible returns, but also bigger losses. Your job as a beginner is not to gamble, but to grow steadily. Compound interest is your best friend. Compound interest is growth on top of growth. It's when your money earns money, and then that money earns money. Albert Einstein is rumored to have called compound interest the eighth wonder of the world. Whether he said it or not, the truth remains it's powerful. If you invest $100 a month at a 7% return, in 30 years, you don't end up with $36,000. You end up with almost $120,000. Not from saving alone, but from compounding.
Chapter 3. What you can invest in. Let's go through the essential investment types you'll encounter as a beginner. 1. Stocks. A stock is a piece of a company. If you own one share of Apple, you literally own part of Apple. Stocks have high potential returns, but also high volatility. 2. Bonds. Bonds are loans you give to governments or companies. They pay you back over time with interest. They're safer than stocks, but grow more slowly. 3. Index funds. An index fund is a basket of thousands of stocks. Instead of picking companies one by one, you buy a tiny piece of the entire market. This dramatically reduces risk and is considered one of the best options for beginners. 4. ETFs. Exchange-traded funds. ETFs are like index funds, but bought and sold like individual stocks. Easy to buy, low cost, and perfect for beginners. 5. Mutual funds. Professionally managed funds that pool investor money. These tend to cost more in fees, so many beginners prefer ETFs. 6. Retirement accounts. These accounts give tax advantages. 401k through your employer. IRA, traditional or Roth, part of your personal investing. Don't worry, we'll go deeper on these in a moment. Chapter 3. What you can invest in. Let's go through the essential investment types you'll encounter as a beginner. 1. Stocks. A stock is a piece of a company. If you own one share of Apple, you literally own part of Apple. Stocks have high potential returns, but also high volatility. 2. Bonds. Bonds are loans you give to governments or companies. They pay you back over time with interest. They're safer than stocks, but grow more slowly. 3. Index funds. An index fund is a basket of thousands of stocks. Instead of picking companies one by one, you buy a tiny piece of the entire market. This dramatically reduces risk and is considered one of the best options for beginners. 4. ETFs. Exchange-traded funds. ETFs are like index funds, but bought and sold like individual stocks. Easy to buy, low cost, and perfect for beginners. 5. Mutual funds. Professionally managed funds that pool investor money. These tend to cost more in fees, so many beginners prefer ETFs. 6. Retirement accounts. These accounts give tax advantages. 401k through your employer. IRA, traditional or Roth, part of your personal investing. Don't worry, we'll go deeper on these in a moment.
Chapter 5. Retirement accounts, the hidden wealth builders. Retirement accounts are one of the most powerful tools for building long-term wealth, yet many beginners ignore them because they seem complicated. In reality, they're simple and incredibly valuable. These special accounts are designed to help your money grow faster by giving you tax benefits, which means you get to keep more of what you earn. One of the most common retirement accounts is the 401k. If your employer offers one, especially with a company match, it's almost always smart to take advantage of it. A match means your employer adds extra money to your account when you contribute. It's basically free money that instantly boosts your investment. Very few opportunities in life give you guaranteed returns like that. Another option is the traditional IRA. This account allows you to invest money before taxes are taken out. Because your contributions are tax deductible, you lower your taxable income now and pay taxes later when you retire and withdraw the money. This can be helpful if you're currently in a higher tax bracket and expect to be in a lower one in the future. Then there's the Roth IRA, which many beginners find especially useful. With a Roth IRA, you invest money after taxes, meaning you pay tax now, but your investments grow tax-free and you can withdraw the money tax-free in retirement. That means all the growth, all the gains, and all the profit you accumulate over the years can be taken out without paying a single extra dollar in taxes. For young investors or those just starting out, this is a huge advantage. Overall, these retirement accounts help your money grow faster and protect more of your earnings. Using them early and consistently can make the difference between just getting by later in life and enjoying true financial freedom.
Chapter 6. How much should a beginner invest? As a beginner, the amount you invest doesn't have to be big. What matters most is simply getting started. If you feel unsure or nervous, begin with just 1% of your income. If you're more comfortable, aiming for 10% is a strong goal. And if you're feeling ambitious and want faster growth, investing 15% or more can make a huge difference over time. There's no perfect number because everyone's situation is different. But remember this, every dollar you invest today has the power to grow. Even something as small as $20 a week can turn into more than $30,000 in 20 years thanks to steady growth and compound interest. Starting small is still starting, and that's what counts most.
Chapter 7. Common mistakes beginners make. To protect your money, avoid these. 1. Trying to time the market. You can't predict highs or lows. Even professionals can't. 2. Putting all money into one stock. This is gambling, not investing. 3. Checking the markets daily. Markets move up and down constantly. Your job is to stay consistent. 4. Ignoring fees. Even small fees, like 1%, can cost you tens of thousands over time. Always choose low-fee funds. 5. Investing money you need soon. Never invest rent money or your emergency savings. Investing is for long-term goals. Chapter 8. Understanding risk and your emotional side. The most challenging part of investing isn't understanding charts, numbers, or financial terms. It's managing your emotions. Markets go up and down, sometimes sharply, and those swings can make even confident investors nervous. But the beginners who succeed are the ones who stay calm, avoid panic, and stick to their long-term plan. A helpful rule of thumb is to match your investments with how soon you'll need the money. If you need the money in 1 to 3 years, it's safest to keep it in a regular savings account where there's no risk of losing it. For 3 to 10 years, using a mix of stocks and bonds helps balance growth with stability. And if you won't need the money for 10 years or more, investing mostly in stocks, especially broad index funds or ETFs, gives you the best chance for long-term growth. Over time, the market's ups and downs tend to smooth out, and patient investors usually come out ahead. The key is to stay steady, trust the process, and not let short-term emotions ruin long-term success. Chapter 9. Your first investment plan. Starting your first investment plan doesn't have to be complicated. Begin by opening either a Roth IRA or a basic brokerage account. Both are great options for beginners. Once it's set up, start investing weekly or monthly. Even if the amount is small, consistency is what builds real wealth. Next, choose 1 or 2 simple ETFs. A common beginner-friendly plan is to put 80% into a broad stock ETF like VTI or VOO and 20% into a bond ETF like BND to add some stability. This mix gives you growth while reducing risk. The most important part is sticking with your plan, staying patient, and letting your investments grow over time. Remember, the market rewards discipline, not perfection. Chapter 10. Growing wealth over time. Wealth grows slowly at first,
but it builds faster than you expect. For example, investing just $100 a month at a 7% return can grow to nearly $120,000 in 30 years. Triple that to $300 a month, and it can grow to over $350,000. That's the power of consistency and compound growth. As you progress in life and increase your income, try to also increase the amount you invest. The more you invest, the more your future wealth expands. Over time, investing stops feeling like a financial task and becomes a path to freedom, opportunity, and choices you wouldn't have had otherwise.
Chapter 11. The Mindset of a Successful Investor. Long-term success in investing comes from the right mindset. First, play the long game. Investing isn't about getting rich overnight, it's about building wealth steadily over years. Next, focus on the things you can control, like how much you invest, how you budget, and how consistently you save. Don't waste energy worrying about things you can't control, such as market crashes, news stories, or daily price changes. Finally, commit to continual learning. The more you understand money and investing, the better decisions you'll make. Just like your investments grow through compounding, your knowledge grows too. Each lesson adds up, making you a stronger and smarter investor for life. Chapter 12. What to do next? Now that you understand the basics, it's time to take action. The steps are simple, and each one moves you closer to building real financial security. First, choose an investing platform you feel comfortable with. Once you've picked one, open either a Roth IRA or a regular brokerage account. Both are great places for beginners to start. Next, deposit $20 to $100 to get going. You don't need a large amount, the important thing is beginning. Then choose a simple, reliable ETF like VOO or VTI, which gives you broad exposure to the stock market without needing to pick individual companies. After that, set up automatic contributions so your investing happens on its own, without effort or stress. Finally, make a commitment to stay consistent for the next decade. Most people never take these steps, which is why so few build true wealth. By taking action now, you've already done something powerful. You've learned how to invest and started your journey toward a stronger financial future.
You don't need wealth to start investing. You build wealth by starting. Whether you're 18 or 58, working your first job or earning your highest salary yet, learning finance for the first time or beginning again after past mistakes, you can build a better future. Let this audiobook be your turning point. Let today be the day you stop delaying and start building. Your financial future is planted in the decisions you make right now. And today, you've planted the seed.